ask that because you're working on a book. It won't be out till next year, but about market psychology. So you're obviously digging into this topic. When you look at this market and the research that you've done, what can you surmise from how people really feel and think?
Well, you know, the market is about as highly priced as it was in 1929. But the market psychology seems very different now. Back in 1929, there was this tension about the craziness of the market. It was a lot of newspaper articles would tell you, "Don't worry, everything's fine." Why are they saying that? Unless people are worrying. The President of the United States, Calvin Coolidge, was constantly boosting things. There was the idea that you had to boost things because people were gambling like in the market, and we didn't want them to get discouraged.
And we don't see that now in any way.
Well, in some, yeah, it's
maybe in a
all
couple of
matter
equities,
degree.
but overall, you don't think we see that.
We see it in Bitcoin, okay, but that's not huge. It's hard to read these things because obviously there's all different kinds of people and different stories going around. But it just seems to me, I went back to 1929 and read the newspapers. There's a different. Also, back then, there was a lot of talk about margin credit, about people borrowing to buy stock. And they were borrowing 90% sometimes to buy stock. It wasn't regulated. And people were saying, if the market goes down, these people are going to get margin calls. That was the talk, big time. It's not, not much talk about it now.
Does that contribute to less risk? The fact that even if we are highly valued, in your opinion, that the market, I don't want to say a downturn is not unlikely, because listen, downturns are healthy and normal, but a steep, fast, severe downturn is less likely simply because people aren't going nuts on the way up.
Yeah, what I like to point out is that in 1929, from the peak to the bottom, it was 80% down. And the market wasn't really much higher than it is now in terms of my CAPE ratio. So it looks. So are we? You get pause when you notice that, but I don't think that it's going to happen this time. And maybe it'll be more. It doesn't look. I wouldn't call it healthy. I'd call it obese. This market, not healthy. But some of these obese people live to be 100 years. So you never know.
Well, I mean, are you betting on it lasting another 5-10 years? Are you investing your own money in equities despite your reservations?
Remember, I'm talking about U.S. equities.
Yes.
And you have to know that, according to Barclays, the U.S. has the highest CAPE ratio of 26 countries. We are number one, the highest country. So it's not just a matter of low interest rates. It's something about the American atmosphere. Now, it is partly the Trump atmosphere. Investors love this. I can't, exactly explain why. It maybe has something to do with prospective tax cuts. But I don't think it's just that. It's something deeper. And it's pushing the American market up. And I don't see reason to think it's not like it was in 1929. It's not the same. Part of it is fear of technology. People are buying stocks because they're afraid they'll lose their job to a robot. That wasn't prominent. Well, it was actually some of that in 1929, but not as much. So this is more secure. I don't really want to encourage people too much to put a lot into the most expensive market in the world, but I wouldn't pull it all out either.
Okay, it's that's a pretty interesting view. Is there any part of the world that you do like, Professor?
Well, the lowest CAPE ratio of the 26 countries is Russia. Okay.
Doesn't it deserve it? Mired in recession forever?
Yeah, I actually, I have, I'm thinking about it when it's that low. But anyway, I'm not going to advocate that. They're all different CAPE ratios. Europe is generally low. UK is low. Great countries. Why not? Why would you put all of your money in the U.S.?
Yeah, so no Russia. Russia looks attractive, but you just can't do it.
I don't know.
Can't do it.
I might do a little Russia, but I haven't yet.
There's nothing wrong with investing around the world. You're not endorsing the Putin regime. You're just saying it's a good value. You got to be. You always talk about animal spirits. What's wrong with saying I may not like this country or that leader or whatever, but I'm supporting the corporations that exist there? It's interesting. So the Russian market is an interesting market for you to look at. I like that. Bitcoin. You referenced it at the beginning. Jamie Dimon telling us at our Delivering Alpha conference he thought it was a fraud. Do you think it's a bubble?
I think it is the best example at this point of a bubble in terms of the enthusiasm that it engenders. People really like the story. I like to talk about narratives. Lots of other people. Economists generally don't talk about narrative, but Bitcoin has the best narrative. It even has, it's like a mystery story. With Nakamoto, the inventor, no one can find him.
He may not even exist. It could be some sort of a mashup of names. They don't know if Satoshi Nakamoto is a real person or like 2 people or 100 people or nobody. Yeah. Maybe it's you. Did you invent Bitcoin?
No, I haven't done Bitcoin.
I did not either, so that's 2 people off the list. So there we go. So do you think it'll end badly? Not all bubbles have to end badly, by the way. The
point is that it's a story. It's a story. It's a fictional story that drives people's excitement. It's not entirely fake. There's something real about it. And I think Bitcoin has some technology that may eventually turn out in some other transformation to be really important. But right now, it's a story in a bubble.
Well, just wait. You're going to find out people's passions when you start to get the "you're old and don't get it" tweets. Whenever you talk about Bitcoin, it just means and you say it's not of value. Yeah. You're old and don't understand. So there you go. I said it before they could. Professor Robert Shiller, always a pleasure, my friend. Thank you for joining us.
My pleasure, Brian.